Hello and welcome back to Income Tax 101 Part 2. Here is everything that you need to know about income taxes in India. In the last episode, we have discussed about how income tax is calculated in India for the old regime and new regime. So, now the question is, when will the tax be calculated and deducted from your salary and other taxable instruments? Let's see it in detail. So the tax deduction for salary will be deducted every month in the form of TDS. You can check your pay slip to get the details of how much salary was deducted as tax. And TDS is nothing but tax deducted at the source. So at the source of your income, the tax will be deducted. That is called TDS. So when you get interest from your bank, right? So even the TDS will be deducted over there. So TDS is a common term that is used whenever a tax is deducted at the source of your income. So it is not just for your salary. It is applicable for all the other incomes as well. So for your salary, TDS will be deducted every month and you can find it in your payslip. You can also find it from the Income Tax India website. So you can go to this website, which is Income Tax India efiling.gov.in. So this is a portal where you can log into using your PAN number, and then you can go to my account and view form 26A. So this will give you the entire TDS deducted for the financial year. So you can check it in your payslip as well. If not, you can check it from the Income Tax India e-filing portal as well. Now the question is, how much amount will be deducted as tax from your salary? For that, you need to find total taxable amount for your salary, and then you need to calculate what is the total tax, just like I've explained in the previous session. And you have to divide the total tax amount by 12. This will be your monthly tax outgo, and it will be deducted from your salary in the form of TDS. But please remember, the TDS is deducted at source, which is by your company. But your company will not know these three income streams that you have. They'll have only information about your salary. So your tax outgo will be completely based on your salary. For these additional incomes that you are getting, you need to calculate taxes manually and you need to pay it at the end of the year. So that is your responsibility. This monthly TDS outgo from your salary, it is only for the income that you get as salary. This is the place a lot of people will get confused. TDS is deducted from my salary automatically, so the tax is automatically going to the government. So why I need to pay additional taxes? The reason is your company will not know about your additional incomes. So it is your responsibility as a taxpayer to declare these incomes and pay taxes on top of it. So moving on, the next item is what is financial year and assessment year. Lot of people will get confused about these two terminologies. Let's see it in detail. And in addition, I'll explain about what are the responsibilities that you have as a taxpayer in every financial year and every assessment year. So today's date is 6/1/2021. So 6th January 2021 is the today's date. For today's date, we are in the financial year 2020-2021. So for this financial year, it actually starts from April 1. All the financial year, it starts from April 1 and ends on March 31. So this financial year started on April 1, 2020 and it ends on 31 March 2021. So this is your financial year. This is your current financial year. If you are a salaried employee at the start of the financial year, which is on April 1, 2020, your employer would have asked you to declare various investments. So you can go to some portal that is provided by your employer and you can declare what are the investments that you are going to do for this year. So this is just a declaration. There's no need to submit any proofs or anything as such. You can just declare what you are planning to invest for this particular year. So once you do that, your employer will calculate expected tax. Remember, this is expected tax, not actual tax. So your employer will calculate expected tax based on these declarations that you have provided. So they'll reduce these declarations from your salary, and based on that they'll calculate expected tax, and this expected tax will be deducted from your salary every month. So if you are planning to invest 1.5 lakhs throughout the year, for example, if every month you are investing a particular amount, but at the end of the year you will get 1.5 lakhs as an investment, right? You can just declare it and you can invest later. But since you have declared it to your employer that you are going to do specific items, the tax outgo will be lower. Now, the declaration part is done. Now, towards the end of the financial year, like around December or January month, your employer will ask you to submit actual proofs of these investments. So, you have declared you will be investing 1.5 lakhs. Now, the employer will ask you for proof. So, you need to submit the proofs for those investments. So, it is actually called as actual investments that you have done for this particular financial year. So once that is done, your employer will calculate actual tax that you need to pay for this particular year. For example, you might have declared 1.5 lakhs at the start of the financial year, but you didn't actually invest during that year, so you don't have any proof. So the employer will increase your tax outgo from December or Jan month, and they'll start deducting additional tax. There are two things here. Number one, if you have declared a particular amount for an investment vehicle, there's no need to compulsorily invest in that particular instrument. You can invest in some other instrument, or you don't have to invest as well. Anyway, from December or January month, your tax deduction from your salary will be actually based on your actual investments. So your tax outgo will increase if you don't invest based on your declaration. So that's number one. Number two, it is not compulsory to submit these proofs to your employer. If you're not submitting it to your employer, you can submit it directly in the income tax portal while filing the ITR, and you can get the tax refund. So that is completely possible. So from December or Jan, you should start submitting actual proof. Some employers will accept it in Feb and March month as well. So that is your responsibility during the end of the financial year. And during the financial year, you should invest and spend and submit the proofs. So this is just the items that we have discussed in the last episode. So you can invest in various investment options, and you can spend on specific items like HRA, LTA, and you can submit the proofs and claim the deductions. So this is what actual investment proof submission is. And in addition to your salary, you might have other incomes in the form of FD interest, RD interest, capital gains from mutual funds. You might be doing some freelancing, or you might be doing some business in parallel. So if you are having any other additional income, and if the taxable income for that particular additional income is about 10,000 rupees, you should pay advance tax during the financial year itself. So it should be paid for every quarter. So if your taxable income from the other sources is greater than 10,000, I would advise you to pay advance tax frequently to avoid paying interest on the taxes. So this is one very important item, but a lot of people will miss, and at the end they might be paying interest on the tax as well. So this is one item that you need to take care of. So these are all your responsibilities for a financial year. So now, what is an assessment year? This is where a lot of people will get confused. So today's date is Jan 6, 2021, but we are still in the assessment year 2019-2020. So the current assessment year is 2019-2020. So this is what you should remember. So for the financial year 2020-2021, the assessment year will be 2021-2022. So your assessment year period for this financial year will be April 1, 2021 to March 31, 2022. So all the financial related transactions for the current financial year will be assessed from April 1, 2021 to March 31, 2022. That is why we call it as an assessment year. Hope you got it. So as a taxpayer, Your responsibility during the assessment year is to get Form 16 from your employer, and you can download Form 26A from the income tax portal, which will have details of all the taxes deducted at your source. And on top of that, you need to find out whether you have any other income streams like agriculture income or business income or income from selling shares or mutual funds. You need to get all the details. There is an important item here. For example, if you are getting 50,000 rupees as interest for FD from a bank will generally deduct TDS at 10 percentage. So it will deduct 10 percentage as tax and will deposit the remaining interest in your bank account. But it doesn't indicate you have fully paid tax for that particular interest amount. For example, if you are in 20% tax bracket, you need to pay additional 10% tax on the interest that you received from your bank. So this additional tax you need to pay while filing the ITR. So we all file ITR generally during June, July, or sometimes even it takes till December to file it. But while filing ITR, you need to, consolidate all the profits that you have got, and you have to manually calculate the taxes, and then you need to file ITR. So if there is any additional income that you are receiving, you need to pay extra tax based on the calculations that I have mentioned earlier. But in some cases, you might have actually invested a lot of amount in various investment, but you might not have declared it to your employer. In that case, you can submit it during your ITR filing and you can get the tax refund. So these are all your responsibilities for the financial year and the assessment year. So currently we are in financial year 2021. So till March 31, you have time. So you can invest amount in various investment vehicles, or you can spend it on HRA, LTA, fuel, and food coupons, and you can reduce your tax outgo. So it is allowed till March 31, 2021. And after March 31, 2021, you'll have to wait for the Form 16 and 26Afs to be generated, and then you need to calculate your tax outgo and you need to file ITR. And if there is any additional tax that you need to pay, you have to pay it. If there is any tax refund that government needs to send it back, then you can get the refund as well. So this is your responsibility as a taxpayer. I hope this session was useful. If you have any queries, please let me know in the comment section. I'll be happy to address it. Thanks for watching. Have a great day. Goodbye.